Hello everyone, this is Marybox Crypto. Welcome back to my channel. In today's episode, we're going to discuss quite an important topic, which is Bitcoin halving. If you're new here, don't forget to subscribe. We almost hit 500 subscribers, which is crazy because I made this channel 2 weeks ago. There have been 2 Bitcoin halvings, the first one in 2012 and the second one in 2016. A Bitcoin halving occurs every 4 years or after 210,000 blocks have been mined. Both halving events have happened before significant bull runs, and the third halving event in the history of Bitcoin is coming up in May 2020. So what is a Bitcoin halving? Bitcoin halving reduces the amount of Bitcoin rewarded by half to Bitcoin miners who discover a new Bitcoin block. Bitcoin blocks are essentially parts of the Bitcoin blockchain where all transactions involving Bitcoin are recorded. Whenever Bitcoin exchange occurs, it is recorded in a block like a page of a ledger. A mathematical problem is associated with each block, and miners are continuously using computers to record all transactions and solve those math problems. As more miners compete for the reward, the difficulty of solving the problem increases. Here's how it works. When Bitcoin started, the block reward was 50 Bitcoin every 10 minutes. The Bitcoin code includes a statement which says that after every 210,000 blocks, or about 4 years, given 10 minutes per block, this reward should drop by half. Following the last 2 Bitcoin halvings, the current block reward is now 12.5 Bitcoin. In the year 2020, it will be 6.25 and so on. The upper limit for Bitcoin supply is 21 million, and once the network reaches that limit, no more Bitcoin can be generated. The idea behind the constant halving is to ensure Bitcoin doesn't suffer from intense inflation as it's distributed. Satoshi explained the thought process in the following email. The fact that new coins are produced means the money supply increases by a planned amount, but this doesn't necessarily result in inflation. If the supply of money increases at the same rate that the number of people using it increases, price remains stable. If it doesn't increase as fast as demand, there will be deflation, and early holders of money will see its value increase. Coins have to get initially distributed somehow, and a constant rate seems like the best formula. Now let's talk about the impact on miners. With every Bitcoin halving event, miners need to evaluate their costs. This assessment implies that in some cases, mining will no longer be profitable due to high cost implications attributed to high power consumption and hardware requirements. However, if the prices and fees compensate for the decrease in reward value, miners will likely continue mining, as without such compensation, they could stop mining altogether. Furthermore, while some miners could give up, others will hold on to their Bitcoins until the prices are on the ascent. Irrespective of all this, however, the speed of mining blocks would not be compromised, as the algorithm adjusts its complexity to maintain a steady pace. As the block reward becomes less significant, mining rigs that are barely covering production costs will be forced to quit the market. There will still be firms willing to mine Bitcoin at a reduced rate, but the market might become less decentralized as a result. So what is the effect of the Bitcoin halving? The halving impacts the amount of Bitcoin miners are rewarded for mining the Bitcoin block, and historically has had positive effects on the price of Bitcoin over the long term. Bitcoin is set up so that there will only be 21 million mined, and the halving occurs to prevent inflation. Unlike central banks that can just print more cash, there is a finite limit to the amount of Bitcoin that can exist, making it more like gold than a national currency. Historical data reveals that the price of Bitcoin rose from $12 to $14 right after the first halving event in 2012, while only weeks after the second halving, Bitcoin price started the historic rally that soared its price from $582 to the all-time high of $20,000. The next halving is only around 5 months away, so what can we expect to happen to the Bitcoin price? The third halving is expected to occur in May 2020. During the two previous halvings, the price consolidated close to the support line prior to the event before the rate of increase accelerated upward. I believe that it will follow previous trends by reaching a new all-time high a year after, so Bitcoin could likely hit $80,000 or even $90,000. Here are some major facts about the Bitcoin halving 2020. So now it's time for some price prediction. Josh Rager is a trader and investor with a quite popular Twitter profile. He has more than 60,000 followers. So Josh has done a variety of informative charts on the long-term Bitcoin price prediction based on the previous halving outcomes. Josh Rager's Bitcoin price prediction for 2020 not clearly stated, but according to the charts, until the end of 2023, the price of Bitcoin could skyrocket towards $150,000. Bitcoin halving is the one event that many investors see as a bright spot and a great hope for a rising Bitcoin price. In the past, it was practically a guarantee that the Bitcoin price would rise. This is due to the simple economic principle, the scarcity of supply. As a result of halving the block reward, the supply of new Bitcoin will be significantly reduced from 12.5 to 6.25 Bitcoin in May 2020. As a result, according to the theory, an excess demand arises, which leads to a rising price. Thank you for watching this video. Let me know if you think the 2020 Bitcoin halving will have any significant impact on the price of Bitcoin. Like this video, subscribe to my YouTube channel, Instagram and Twitter if you want to see more updates, and I'll see you very soon in my next video.